We have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million.
Cathie Wood gives her market analysis and prediction for Bitcoin in the weeks ahead, as well as why the Bitcoin ETFs will have such an impact in 2025. Cathie's bullish prediction for Bitcoin's value as an asset class will surge from just over $1 trillion today to $20 trillion. That's over 20x the current value and will place Bitcoin's price at over $1 million. Thanks to BlackRock's significant influence and with major hedge funds and institutional investors now on board, a moment many have been eagerly awaiting for well over a decade. ARK Invest CEO Cathie Wood highlights the decentralized and transparent nature of the Bitcoin network, making manipulation highly unlikely. Let's get right into the interview with Cathie Wood. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course. Mm-hmm. So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year. And that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter or earlier in January, Bitcoin led the market, and so began to. And so we're watching Bitcoin now, and of course we're having a sell on the news moment, and I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity value. I don't think Chairman Gensler will remain at the SEC, whoever is elected. I think he has aspirations for political some kind of political appointment, so he may go. So, the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We'll get lots of information about what is not a security during that trial. The Gensler could be in the way.
The crypto community eagerly awaits further developments, as these analyses are likely to have significant impacts on the market's direction in the days and weeks ahead.
You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for power over regulatory power over derivatives. And that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight. But those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. This could be an election year issue. And I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, "Wow, he's come up the learning curve so quickly and knows so much. This is fantastic." Knowledge and education. Knowledge is power. Education, obviously, is the route to knowledge. So, I think yes, I think the odds. I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters. And I know that Washington is hearing that loudly and clearly. I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is, it's a technology, yes, and it's a monetary system, then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk like there is in our banking system. You're not going to be held hostage like you were in 08, 09, wondering if your bank was going to survive, or you'd get any more than 250,000, the guarantee, the FDIC guarantee, out of your bank. So this doesn't happen with Bitcoin. Education. Wow, how many risk-off and risk-on assets are there? So I think the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run right into the halving of 2024. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. Today, they'll be able to offer lower rates to savers and higher rates to borrowers. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.